late night, they ain't getting no rest. Work so hard, people think I'm obsessed. Cream at the crop, won't settle for no less. Headed to the top, but reading some focus. Yeah, gorilla of the jungle, I've been beating on my chest. I learned from the struggle, it was hard, just a test.
Hey guys, and welcome back. So today we're going to jump back into the technical side of things, see what's going on in the markets. I'm going to focus kind of on more of the traditional finance today, so we're going to look at some stocks and some macro indices and kind of get my thoughts, take a look at the charts and see what's going on. So without further ado, we're going to jump into the chart over here. Basically, we're going to start on our dollar, see how that's doing. So essentially, what we do see is we were in this bear flag pattern right in through here. The dollar was able to break out. We were in that uptrend structure on the lower time frame here. We are just retesting the breakout point currently right now, so we could continue up. That being said, we're kind of looking at a broad macro, looking for that next lower high in terms of the macro here for the dollar. Ideally, that's what we want to see for our risk assets to do well. So we've seen a little bit of strength from the SPY in the last couple days, but I'm going to talk about some signals, some uncertainties still in the market. But basically what we see right here, currently breaking out of that bearish price action pattern right here. So bullish for the dollar, but not really so much for our risk on assets. We take a look at our indicators here. So basically we had a bit of a bearish cross on the MACD right in there. So I'll zoom in so you get a good view of what that looks like. So bearish cross. We do see here on the DMI that we did approach, was potentially a bearish cross here, and then we're seeing that DMI minus line reject, come back down, and the blue line start to curl back up. So if we see that continue to play out, that favors that that bullish momentum and maybe a further breakout of the DXY here. You know, we do have a decent amount of resistance just above. We've got our 200-day moving average resistance, we've got our 50-day moving average resistance curling down right here, and we've got all this Fibonacci resistance in through here. And then even on the lower time frame, if we pull our Fibonacci resistance from that swing low or swing high to this swing low, we see also all this in here acting as resistance. So it's going to need a lot of work for the dollar to break out. That's why I think we're probably just going to get another relief rally up to those lower macro highs, hopefully rejecting underneath the 50-day moving average here, signaling that we're likely to continue that macro downtrend. If we flip to the high time frame, you can kind of see definitely more oversold. We did get a similar level on the RSI across these two peaks here. So we can assume that the cycle top could potentially be in for the dollar here. We do see that we're just, not quite bottoming yet. On the weekly, gaining a little bit of bullish momentum here with that curling up. That being said, just like on the 4-hour, we want to see this confirmed cross here. Otherwise, we could just get rejected and then be due for more bearish momentum on the dollar. But for now, it's looking fine. We are just riding up this trend line here since back in 2012. So acting as support through here and here, and then we broke out of our downtrend right through here. So we will continue watching this. It's still technically bullish in my opinion. We need to hopefully see that bounce to the higher low and then rejection underneath this moving average here, and then that further macro breakdown similar to what we kind of saw over here is we had our first initial extension of the dollar, a little bit of consolidation pattern in through here, and a second rally up through here. You see that we kind of came back, retested that 200-day moving average, tried to break out of the 50-day moving average there. So I'll zoom in and show you. Basically, we can see right in through here, came up, we came back, retagged the 200-day here, lost it a little bit, retesting that 50-day. We did get that bearish cross, so paying attention to that. I don't think we have that bearish cross quite yet, so we're watching for that. That is a death cross. That's the cross of the 50-day below the 200-day, so we'll continue just following that. We're looking at the VIX here, so the VIX under 20, coming back to kind of those lower volatile levels, so it is kind of supportive that we are kind of trying to print a bit of a bottom here. That being said, none of it is really confirmed. If we take a look at the SPY, essentially what you see is we're just coming into our 200-day moving average. So that's when I talk about macro trends. Ideally, like I kind of explained, is we want the 50-day on top of the 200-day, and then we want price above the 50-day. When we start to lose these moving averages, we run the risk of losing our trend. You can also see where it flipped from that macro uptrend to the low, or to a downtrend. So essentially we just had these higher highs, higher lows, all the way up through here, and then eventually reaching our peak. We've now broken that structure. We've got a lower low. So if this rejects right here, that's a lower high, and then we need to either, we're going to come back, retest these levels, potentially try to form that bottom on the lower time frame. Otherwise, if we break even further, put in that subsequent lower low, that is that confirmation of that downtrend on the weekly chart. We need to be aware of that, and we need to be watching these moving averages, how they react and how price reacts coming into this moving average here. So nothing really too crazy going on. We're just coming into that resistance. If we look at the low time frame, we are in a bit of an uptrend here on the 4 hour. That being said, it's just a very low time frame uptrend and can easily break down. We want to look for confirmation on the daily chart, if not the weekly chart. We kind of see here the bullish or the bearish momentum kind of starting to pick up a little bit here. Still have our positive DMI line above the 2. But we're starting to see it kind of flatten out here. We see the RSI curling over a little bit, and we see the MACD also starting to curl over a little bit, but still kind of in those more neutral-ish territory. So we could continue pushing up a little bit. You know, it's not uncommon for us when we breach these moving averages to come out, poke our heads back above the 50-day, but ultimately it's going to be if we can hold the 50-day as support, or if we're going to break down, get rejected, and then continue to the downside. So the most bullish case scenario, let's say we go up a little bit more and then we just maintain this uptrend structure on the low time frame. We want to bounce from that 50-day if we're going to continue up. So when price comes up here, we're looking for that retest of these moving averages, and then we're watching our low time frame momentum indicators. If these are sufficiently reset across, let's say, the 1 hour, the 4 hour, and the 12 hour, that could support a broad move up, in which case we can look to start taking swing positions. Otherwise, we might just be due for that rejection and that breakdown. So watching what price does at the 50-day, you know, if we do go into something like this, that's not going to be the best for the macro trend, and we need to continue following that. So for now, markets kind of remain in that no man's land, kind of in limbo. We're still just stuck under key moving averages. So I'm going to talk about the differences kind of between these 4 indices here. So we've got the SPY, which is the S&P 500. We've got the NASDAQ 100, so the top 100 tech stocks in the market. We've got the Dow Jones Index, and then we've got the IWM. So the IWM is the Russell Shares 2000. That is the kind of the bulk of the market is made up in the IWM. That's all the small cap stocks. Generally, we can kind of look for differences in price action and differences in structure between these indices to give us an idea of what's going on in the market. So when we look at the SPY, we're stuck under the 50-day, we're stuck under the 200-day. When we look at the NASDAQ, same thing, under the 50-day, under the 200-day, haven't experienced that death cross yet. Dow Jones Index under that 50-day, but we are above the 200-day, so slightly different on the Dow Jones here, although still stuck under this key moving average and this upsloping trend line with kind of overheated nature on the low time frame for those momentum indicators. We take a look at the IWM. We actually see we did experience that death cross, so we had that bearish cross of these two moving averages. Price is not showing as much strength as these larger indexes are through here, so that's kind of an interesting little comparison. Basically everything except the broad market, the lower, so that's when we say, when I talk about the Mag 7, that's the Magnificent 7, it's a group of stocks. Essentially what we've seen in the last couple years is kind of the majority of gains made in the stock market have been comprised of this handful of stocks, so it's really propped up markets quite a lot and left the smaller, the small cap stocks, the IWM stocks, kind of in the dust. They've really been underperforming. You can see that noticeably with that confirmed bearish cross of the two moving averages. And if we look on the daily, we're going to be in pretty, we're in downtrend structure for now, trying to reverse it on the daily. But if we look at the weekly, it's going to just be confirmed downtrend with those lower highs, lower lows. So really getting to very oversold territory on this indice. But it doesn't mean that we're going to reverse and go into an uptrend. It could just be that dead cat bounce into resistance up through here, and then ultimately bleeding to lower levels. So we need to pay attention to that. Basically, we're also going to flip over to gold here. So gold doing well again, kind of continuing to hold its support up high. That uptrend structure is it's risking it a little bit here on the low time frame. So going to watch gold. It does have the potential to actually break down here on that lower time frame, in which case we'll continue watching it. But the MACD looks good. The DMI looks good. The RSI, we want to see it kind of curling back up here and to the upside, and we are still supported by all the major moving averages. So for now, in terms of the daily chart and the weekly chart, gold remains in its macro uptrend, still looking really good. We see that the RSI coming here looks to be curling a little bit already. So if we can get a bounce, another leg up here, gold could push up a little bit more. That being said, not interested in really taking a position in gold right now, just because of that crazy run that it's had. So we're just going to keep going down the list here. We see silver here doing pretty well on the day, up 2.24%. We do see a ton of resistance all the way up through here. So we've got our upsloping trend line, we've got the previous high resistance here, and we've got massive sell order blocks all through here. So paying attention to silver, that might be the upper side target. If you're in silver looking for that trade, you might take profits kind of up in this zone right through here. We can see though, we do have that bullish momentum on the DMI. So we see the blue line bouncing off the orange line, curling up. We see also that MACD curling up there, and then the RSI with that bullish cross as well. So silver looks good. It can actually continue on. We're holding our moving averages in that macro uptrend, so silver looks good, and I think it could get up to these targets here. This would be your first level at about $31.50, and then all the way up to, about $36 or so is what we're looking at for that potential high for silver. If we do get that, that's going to be a really cool move, because if we can, let's say we can break out here, and we come back and we're holding these levels as support, just maintaining that uptrend structure, and then holding this upsloping trend line here. So I'll show you it on the weekly. Basically, that would just be a huge breakout of this kind of wedge pattern that we are in, and then likely might be able to attack higher targets from there. So silver looking good for now. I'm going to flip over to the stocks. We're going to take a look at GDX here, so the gold miners ETF. Essentially, what we had this triangle here just consolidating in between. We had our bullish cross of the 50-day over the 200-day. Price gets above this, retests it, bounces as support, holding it on that uptrend structure. So looking really good here for the gold miners. If we take a look on the 4-hour time frame, we can kind of see also a price pattern here. So this is that inverse head and shoulders move. So what we have is we've got the one shoulder, we've got our head, and then we've got our second shoulder here. So basically what we can do is when this breaks the neckline, so this is the neckline up through here. I'll just draw that out, make it a little bit more visible for you. Essentially you can see we've got our neckline. When the price breaks out from the neckline and retests it, that's a really good bullish sign that we're likely to continue that move. And then our measured move target is from the low of the head to this neckline. You can see 7.06 as that measured move. So it also gives you a percent, but for a measured move, we just take the number amount here, so the dollar amount essentially, and then from the breakout of the neckline, so right here, we pull the same amount, 706. You're looking at a target for the gold miner ETF of about 51.42. That also coincides with this upsloping trend line resistance, so I'll show you that. Basically, that's what we see. We see large sell order blocks coinciding with a measured move target and upsloping trendline resistance. So that's a good target to be taking profits on GDX. If we're looking at GDXJ, which is just the junior gold miners, very similar setup, a little bit more volatile because they're lower market cap. So we see here just a slightly bigger measured move, looking for a potential target up here on this kind of sell order block, and then we also have that confluence of resistance with this upsloping trend line. We're going to take a look at Tesla here. So Tesla, we did see coming down to its high time frame golden zone retracement here, tagging our first zone of support, bouncing from there, holding the lows, and then ultimately coming back up into this downsloping trendline resistance. If we take a look at the weekly, we're looking like bullish momentum is building here. We could still experience a little bit more of downward pressure, seeing that MACD slow down, but for the most part, we have experienced a good amount of downward pressure on the MACD. And we have the RSI coming down to more oversold levels and curling back up. So looks decent on the weekly chart there. We can take a look at the daily to get a little bit of a better idea. On the daily, we actually see here that what we want that essentially the blue line to break above it. If we start to lose momentum and get rejected and curl back over, that signals the bearish trend is kind of gaining momentum again. We see RSI kind of curling over here on the daily a little bit, and MACD, we did get that bullish cross, but the green histogram kind of has already about half, or let's say about a third played out so far. So we're going to really need to pay attention to the price action. Like I said, we're just coming into resistance here. So horizontal resistance, downsloping trend line resistance, 200-day moving average and 50-day moving average rate here. So not really worth it to take a swing position at the current price, in my opinion. I would rather wait for this confirmed breakout, take out these trend lines, these resistances, come back, retest it, enter on the back test of the downsloping trend line, get in that trend and ride it up to the targets up here. So Tesla, we're just waiting patiently. We want to see that breakout, that back test supported by our indicators, and then we can continue higher. We'll flip over to NVIDIA here. So NVIDIA is one I did add a little bit, kind of around $115. I shared that in my Telegram group as well when I made that purchase. So DCA'd a little bit in the $115 range. We see this support zone right through here. We are kind of in those lower highs, lower lows for now. So just consolidating, not really worth taking a position right now, in my opinion, unless you already have a position and you want a DCA and you think the market is going to go up. That just for me right now, the way all the moving averages are stacked and how price is underneath them, it's just a little bit riskier to be taking positions without that extra confirmation. We can take a look at the momentum indicators. We kind of see, bearish momentum curling back up, the MACD kind of getting a little bit of relief, but RSI also showing a little bit of a toppy kind of nature there. So I do think just more consolidation for NVIDIA. We're not too worried about it right now. We'll follow it as we kind of go. Looking at Google here, getting a little bit more bullish momentum. So we got the blue line curled up. We had our bullish cross. And you see we were able to regain this trend line for now. So that was one thing I was watching. We do have quite a long upsloping trend line dating back here, so we did temporarily lose it, just sweeping below. We could just continue to break back up. As long as we can hold this trend line, hold that higher low, higher high structure, then we could continue on with another leg, looking for a potential resistance target move. So we pull our fib from there to there. So we could even see price push up into that 50-day, as I said previously. Looking for that, if we see kind of uptrend structure, maybe like this, you look for that entry right there, and then we're riding this to new highs, hopefully supported by the 50-day and the 200-day moving average. So moving on, we'll take a look at Dell. Dell is another one that I'm interested in potentially accumulating kind of in the next couple years or so. I don't really have a time frame for the markets. I'm just following the price action. So what we see right now is just that downtrending price action. I want to see those higher highs, higher lows, regain control of these moving averages, and then look for a position there. So Dell still just in that downwards consolidation pattern, not interested in taking a position right now. AMD looks a little bit better than Dell, so we have a couple trend lines that I'm watching here. We've got this downsloping trend line acting as resistance all the way through here. We have broken out of it for now, bouncing from this high time frame support zone, and then we see we've also got a higher time frame downsloping trend line from this high to this high coming all the way here. So looking for the potential, maybe AMD kind of gets a little bit of a rejection here just above that 50-day, come back, retest the support zone, put in that higher low, another higher high, watch for that confirmation here for that confirmed other higher low, in which case we can look to start taking a swing position there. The other thing I do want to kind of point out is it looks like we might have a bit, or it could turn into a bit of a head and shoulders, or inverse head and shoulders, sorry. So just something like this, we might see play out. anything there. Even if we just go to those lows, looking here, so something like that, we could see that inverse head and shoulders play out potentially. That being said, it hasn't yet, so we don't assume that it will. Looking at Tempest AI, this is another one that I've been talking about. Had that beautiful breakout of the downtrend. We put in higher low, higher high, and then so we're looking for that confirmed higher low over here. Basically, what we could do is pull our Fibonacci from this move to here, and then see where we line up. So maybe looking at a swing position in Tempest, kind of under $50. We will be watching. We want to see that continued strength from the SPY, and we want to see our momentum indicators looking sufficiently reset. So when we look at the daily here, although we were kind of more oversold and we did get our bullish cross here, we do see RSI curling over a little bit. We'll take a look at the lower time frame as well. So also on the lower time frame, RSI curling back over, MACD getting to the neutral territory, and then DMI with a little bit more bullish momentum, but we want to see that ADX line really curling up, as well as the blue line for that continued strength. Otherwise, I think we're due for that normal retracement to support, retest those levels before we can continue up higher. Take a look at Palantir really quickly. So that's another one we were watching for quite a while now. So basically what I'm trying to do is make plans for the future, because we want to be ready when the price comes to our levels. We don't want to be investing based on emotion. So we don't want to wake up one day and be questioning, oh, the market pumped 10% today, so I need to rush into positions because I missed my boat, I missed my entry. Or, oh, the market's dumping today, I need to put everything in right now because this is the only chance I'm going to have. That's not the case. Rarely ever is it the case. In some instances you will get V-shaped recoveries, but most often than not you will come back, retest support before continuing up. So Palantir is another one. We have broken out of the downtrend. We're in this uptrend structure on the 4-hour. Still a little bit overheated on our momentum indicators, so I think we just come back. What we need to do is continue holding these lows here and then look for that position. So we might see if Palantir comes back to that 618, somewhere around $90, looks like it wants to bounce from that 50-day moving average. It could be a good swing opportunity. That being said, if you're entering here on a 4-hour confirmation trade, you're going to want to stop loss just below, ideally as low as you can put it. So what I'm going to show you here is that risk reward tool. Basically, I'm going to find a target level for Palantir. We can see essentially, this 786 to 618 is going to be the biggest opportunity for that resistance level. So I'm going to say if we're targeting the 786, we take our long position tool and we're waiting for our entry here, or let's say we're targeting the 618 to 786. We'll go right between the zone just to be a little bit more conservative. Then you can pull your stop loss. You could have it all the way, like I said, you want at least 3-to-1 risk reward, so you could have it all the way down here even if you wanted to, but ultimately just at least below these lows here. So that's because that uptrend structure that I talk about, if we lose these lows, that is losing that uptrend structure, and you want to be out of the position before that extended downside move. So keeping your stop loss somewhere there helps you just protect that position, stop you from getting wicked out, and you can still see that risk to reward ratio on that trade would be 3.3. Looking at Baba here, Baba's one that I previously had a position in. We were watching this bearish rising wedge. We're starting to break down from it, similar to what I saw over here where we broke down from this wedge, ultimately bleeding back. So I was in Baba since $80. I shared that in ITC many months ago. And then I kind of cut half my position at 120 here in this resistance, and then I decided to cut another half of what I have currently right now, just as we're losing this rising wedge, just because of all the indices stuck under those moving averages, the little bit of weakness here, the bearish kind of reversal pattern printing. I just want to kind of take those profits, hold a little bit more, so I'm holding 25% of the original position. Other than that, I've got kind of a profit-taking target or basis of about $130. So $80 to $130, a 60% move, that's really good returns, book those, and then look to redeploy those profits at lower targets. So what I'm looking for, ideally, if this were to play out again, we would essentially come back to these lower support targets that before the breakout occurred. So essentially what we saw here is we broke out right through here, and then we ultimately came back and back tested our breakout, consolidating through here. So watching BABA, you know, although there is a strong support zone here kind of starting around 125, you know, I would be a little weary. If I'm entering here, it's going to be smaller position size, really looking to increase the buys lower down in these targets here. Anywhere from that 95 up to about 115 might be a good opportunity to accumulate some BABA. And then worst case scenario, if we come back to $85, that's going to be a really good opportunity to acquire them. They're one of the biggest Chinese companies. They're going to be a huge AI player in China going forward. So it is a company I continue to be interested in. That being said, just cutting some of my position here. Although I didn't quite reach the peak, you know, we can't complain about making profits. Like I said, I'm not here to perfectly time the top or bottom, but if I can get in on the trend, ride it up and sell it at higher, securing those gains, and do that on a compounded basis, that's what's going to create success in the long term, rather than buying a falling knife, buying resistance, getting caught on the wrong side of the market, and then regretting it after. So last but not least, we're going to take a look at Intel here. So also have just a small position in Intel when we came back and retested that 200-day moving average. So we do have a little position in them for now, but ultimately we were targeting lower buys as the kind of accumulation range. So we want to look at this 786 2.5 area in through here, and then dynamically DCAing as we reach those lower targets. Right now, I do have a stop loss on the position at about $17. So this is one where if we start to break the market structure and things look really bad, I'll cut it if I think it makes sense to cut. Otherwise, just holding that small entry position for now and waiting to see what happens going forward. So that's it for today. There's a lot of different charts to go through. If you like the content, if you learned something new, please like, share, subscribe. It all means the world to me, and I'll see you guys in the next one.